Good morning, welcome to a Morning Outlook. This is Kim speaking on Tuesday the 15th of February. So what we've got in store today, firstly just looking, we've had the earnings data coming out here. I'm quite surprised it's so low key on the impact value here on Forex Factory. It should be higher. Anyway, in particular, the average earnings here, 4.3 versus 3.8 seems a bit light. Well, seems a bit light, seems better, and quite a bit better actually. Claimant change was expected to come in at minus 36, only came at minus 31. This might have a sort of a bearing on the average earnings in terms of earnings coming in higher. It might be that we haven't got the full workforce fully back yet, and we'll see how that. Wouldn't have had the full workforce back in January, so we'll see how things develop. But for now, that's quite a positive number. Aside of that, today, I should say this week, today we have the economic sentiment coming out at 10 o'clock. It doesn't really move the markets that much at all. In fact, I would more likely to see that as yellow than the unemployment or employment data. PPI, Producers Price Index, coming out there at 130 in the US. I'm just about to have a quick flick through and see if there's anything else that I can see on my other system, because this seems a little bit more on the time. Nope, that is actually it today. But there we go. In geopolitical side of things, of course, the 16th, that's tomorrow, is the day that people believe that the Russian offensive will start. So we'll see what happens there. And it might put more pressure onto the markets today. Certainly what we're seeing here over the last few days, we're just looking at the pound dollar actually, but it's just a chop here. Well, it just says it all really. People are very much undecided. Euro being a bit more aggressive to the downside here, run back towards its monthly pivot. Let's just run through the euro whilst I'm here. Lower highs, lower lows in the intermediate time frames here. Looking again like it's sort of bear flagging. Looks like it's got more downside, and well, we could get a key reversal bar sitting in at the end of this hour. So does look on the softer side for the euro, and with things as they are, I wouldn't mind being surprised if it does start kicking down here. It's relatively slow initially, or it does a fast move and then stalls and takes ages. Yesterday was a prime example. It just sort of it sold off quite quickly, stalled, looked like it was going to get a bit of a rally on the comments coming from the Russian foreign minister, and then off it run. I think today could be a similar picture unless something more positive comes out. So the pound, as I said, much more choppy, in range, more range bound. It's still in its regression channel sort of area here. Well, it's still in all sorts. It did double bottom pretty much yesterday, the earlier stage there, but has recovered since that level actually. Just looking at the shorter time frames here though, again, bit like the euro, a bit soft. It's a bit of a triangle sort of sitting here. Could go either way, of course. A break to the upper side of the 50 MA, above the 50 MA, I'd be looking much more bullish. But at this stage, I'm still looking at the bearish side, and the way things have been running, that S1, there was certainly yesterday's lows could be in target, but even the S1 could be. Okay, Dolly Yen. Dolly Yen was a bit of a mixed bag yesterday. It ended up, started seeing the strength that we normally see when there's risk off, but then it also sold off against the US dollar here, and we saw quite a weak yen in the afternoon, pushing up. But again, it's clawed back, working its way back. The US dollar coming off a little bit here at the moment, versus the yen, lower highs, lower lows, looking a bit on the softer side. I just wouldn't even try to trade this, to be fair. If I was looking at it, I just think, well, the S1's got a good chance. Yesterday's lows have got a good chance on this downside, but realistically, it's just many of these markets are a bit iffy at the moment, but that is one that can just go against a lot of what seems like logic. Aussie dollar, lower highs, lower lows coming through on the intermediate time frames. On this time frame here, looking at the dailies, as I said yesterday, well, we did get a continuation. Aussie dollar's got some strength coming through. Some money flows have changed a little bit. It's about the fourth week in a row we've seen the institutional money being a bit more positive, certainly less bearish, I'd say. It hasn't turned over completely positive yet, but certainly less bearish, and we could see something more once if we get past the political side of things. So Aussie dollar at the moment, looking on the weaker side. Yesterday, just pretty much a bit of movement, consolidation, and I wouldn't be surprised if we see more of the same here. Canadian dollar, nothing's flying particularly well. I'd expected the Canadian dollar to do better. Got this trend line across the highs here, was looking for a break of that sort of level for the upside, but nothing happened. It was a pretty slow, sluggish old day. It got close to it in the earlier session, just ran into those prior highs, and that was it. It just consolidated. It broke the highs here I was looking for to an extent, but the problem when you've got this sort of price action, you've got the previous resistance levels as well, so it's not just breaking a trend line or some near-term highs. It's a slow old pace if it's going to continue up that way. I would have expected it to do better off of the fact that oil's so strong, but this really is because of the risk-off situation. Short term here, hourly wise, it was looking sort of soft there, but again, no clear cut clue here for me at the moment. Okay, that's a CAD. Right, let's have a look through the commodity markets. We'll look at gold. Gold's had a good shove up. Now it's continued its shove up on this risk off situation. It's benefiting, although slowing up. You see yesterday's bar relative to the previous on Friday, then you see yesterday's slower, pushing up a bit slower. Well, it's so dependent. Some agreement could see gold coming off very sharply as people rush to exit their safe trades. So just be really wary. Use your stops. Place them well. But for now, gold is looking like it's got some more legs potentially, and the longer things hang around, the better for gold. Now, just one thing, looking at the shorter time frame here, there is some weakness on the RSI. Is a bit of actually a divergence have run off now. It was a bit of divergence. It looked like it's divergent, but no, not really. So the only thing is it has got its daily pivot below, so any retracement could sharply come back to that sort of level. That would provide potentially a decent buy point. So any retracements there on gold at the moment look positive. I am wary that this is being built up largely on the tensions as opposed to for a natural push up there. Okay, but it is what it is. Oil. So oil pushed up once again yesterday, broke out through the previous days, Friday's highs, pushed up once again, gave us a lovely little trade in the afternoon, and this morning it looks like it's given, actually that was yesterday afternoon, beg your pardon, that gave us a lovely trade in the afternoon. As it eventually curled round, I waited a bit longer, didn't take a great risk reward out of it, but took a nice profit all the same. And what we got here, it's just sort of consolidation, maybe back to daily pivot again. My preference is to, I mean, this was 2 o'clock, it's after 2:30 or around about 2:30 when I took a position. Same sort of weight will be on for today, but at the moment, being so close to $100, you do wonder if it will get a bit of a kicker and push up there, even if it's short term. Okay, let's move across to other markets then. What we got? We got the indices. What time is it? It's a bit early for the indices because I haven't got the Let's just do the crypto first, starting off with Bitcoin. Well, Bitcoin's taken a bit of a turn this morning. Yesterday it picked up a little bit. So interesting how fickle this market's been. Yesterday it was looking quite negative, and that we'd see a continuation of this downside. I'm still looking at 46, and I'm sure a lot of other people are looking at it as the line of in the sand. A push up beyond that is much more positive. Ethereum, similar picture, looking at those prior lows there, sorry, beg your pardon, prior highs there, to see if we can get a bit more of a shove. Ripple up this morning nicely, and now of course these mornings can be, again, the movement happens through the Asian session, can be easily given back, but at the moment looking positive, and just on the verge of some of these looking a bit better. Meanwhile though, this to me still looks pretty weak. I'd be looking for a lot of movement yet to be looking bullish here on Cardano. Let's have a look here. Litecoin's quite a little bit more advanced. My old favorite, well, that's trying to, this is triple bottom at the moment, triple major bottom. I don't want to jump onto this. I'd rather see Bitcoin lead the way, so that's really what I'm looking at. Forex, okay, indices then, he says, start off looking abroad there then, into the Asian Hong Kong CSI 300, bit of a bounce there, but as I say, I just completely remain bearish on this. Anything decent in terms of retrace will give an opportunity for yet another sell. However you shape it up, it does look weak. Now, of course, we could, as I say, any sort of political agreements might see these markets rally quite strongly initially, but I think profit taking would be coming in quite quickly. Looking at the, I'm not looking at the S&Ps, but looking at it here, but looking at S&P money flow, big money is still exiting quite considerably. Anyway, Nikkei, looking at Nikkei again, another negative day here, and well, I'm not at all surprised. We're just short of the open, but FTSE, let's come back to the FTSE. In fact, let's carry on looking at the Indian market, the Nifty 50. Big gap down there. That gap might get a bit of a feel if we can push on through this later afternoon session in India, but I'm still, with it breaking the lows there, do wonder if it will continue to the downside in the longer term here. So yes, we might, as I say, might get a gap fill, but today, tomorrow, but still looking bearish in the longer term. Right, let's see the German market then, futures, rolling futures. Well, continuing to sell at the moment. Again, we once again caught the bottoms yesterday. It bounced, it found support. At some stage, the more it goes down there, the more likely it is to run down. Again, the political situation through all these markets is taking its toll, and would take its toll. We'd see a very sharp breakdown if anything was to start within these markets. So and likewise, we potentially see, as I said earlier, decent rallies. So just be aware, this is a highly volatile time everywhere. CAC, same position, really looking at this trend line to see what happens. Give me a bit of a clue. First, just open 17 points down, so 17 points down already, and looking, well, weak at this weakish, although in the bigger scheme of things it could be one of the better gainers if we do see some agreement. The S&Ps still selling off yesterday, slowing down, the momentum slowing in this at the moment, and potentially easing back, but in the bigger picture, I still see that the S&Ps will come down. As I said, the bigger money is still rolling out of it. Higher interest rates, again, Fed Bullard yesterday talked about the need for higher rates quicker. So it just puts more pressure on the equity markets. Although the caveat being, in the longer term, even if it gets up to 1 or 2%, 2% by the end of the year into early next year. Doesn't really matter. That is still historically low rates, and the markets can deal with that quite quickly, but it's just the sort of bit of a shock as it goes through here. It's not at zero. The Nasdaq lower highs came through and on Friday, and we're still looking softish, even though it managed a little bit of a positive close yesterday, but still looking soft. And the Dow Jones similar. So all those markets looking soft. Quick look at the what's happening with government bond yields. Well, they've moved back up a little bit yesterday. So sellers coming back on the bond side, which easing the pressure a little bit increasing the pressure and putting more potential for the dollar to push even stronger. So that's where we are at the moment. I wish you a great day's trading, and I'll catch you in the morning. Bye for now.